Well, hi everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me again today is T3 Trading Group professional trader Dan Darrow, who's also a moderator in T3 Live's virtual trading floor, the Alpha Team virtual trading floor. And as we've uh, advertised ahead of this, he's an options specialist, so we'll be talking lots about options in today's event. Thanks, Dan, for joining me again.
Thanks for having me again.
Yeah. All right. So my first question, as always, is how would you grade your week of trading so far? We're halfway in. It's Wednesday. Give me your grade so
I always love this question. So
far.
I'm a tough grader. If I was a college professor, I'd be the one who never gave out any A's. But so I give myself about a B minus right now.
Okay.
And I guess as we progress through some of the stocks and the charts and some of the trades, which we'll get to in a bit. I kind of like walk through what I've been doing this week, but B minus, and then depending on how tomorrow goes, it could shift up to maybe B plus. But yeah, it's solid B.
Yeah.
There's been some good opportunities, but it's also some things I wish I could have done differently.
Yeah. Some solid passing grades. So for everyone that is maybe joining us for the first time, if you've been here before, you know how this goes. I'm writing in the chat right now so you guys can see where it's at. But the live chat is open for everyone to submit your questions for Dan. So whether you hear us talking about something you want more clarification on as we go through this, or you have something totally unrelated, but a question that you want answered by Dan, ask that in the live chat. And then in the second half of this event, I will get to those questions and we will make sure to go through all of those questions that you guys are asking. So submit those as they come up in your mind. All right, Dan. So let's talk a little bit more about that B minus.
Mm,
You say there's some things that you feel like you missed or you wanted to
yeah.
capitalize on that you
Mhm.
didn't. Talk me through some of those hard times of the week so far. We don't want to just talk about the good stuff. We want to
Oh, of
hear,
course. No,
what the
I mean,
real
oh
ins and
yeah.
outs of being a trader.
Yeah, and I think it's super important. I mean, I think it's
Hmm.
a little disingenuous when people just always like highlight, what worked well, because I mean, the truth is like there's plenty of things that don't work well. It's the nature of
Hmm.
the business. So, yeah, I'm always game to talk about what didn't work, because I mean, for me, it helps to kind of solidify in my mind, and hopefully I learn from it. But
Hmm.
yeah, I mean, this week I'd say one of the hardest things for me this week is just getting over like the fact that we've had like a lot of really strong performance in kind of like a select group of names.
Hmm.
And so what I was looking for coming into this week was whether like that would start to broaden out a bit. So I've been focusing on some names that haven't been participating to the same extent as like the names that everybody knows, like the Amazons and Googles and Apples and Metas and whatnot, right?
Hmm.
So one of the things coming into this week, knowing that it was going to be a really intense stretch of retail reports, it was like I was looking for possibly some good or less bad as feared prints, and looking possibly for some catch up and some recently lagging names there.
Hmm.
We'll go through it in a little bit, but like Target was one of the names that I was looking for, potentially like a kind of like a bounce back report after a few disappointing quarters in a row, and it just didn't materialize. Although it did
Hmm.
it did finish up today, but I mean, one of the quirks of options is that a stock can move in your direction, but if it doesn't move enough to counteract what options are pricing in, then you end up losing. So that's actually what happened today.
Yeah, that'll be interesting. We'll talk about that a little bit more
Hmm. Yeah,
in the nuances of options in a little bit.
sure.
So, as you mentioned, there's a lot of focus on the U.S. consumer this week. We got earnings
Yeah.
from Home Depot
Hmm.
yesterday and Target this morning. Let's start off with Home Depot. Biggest revenue
Yeah.
miss for the company in more than 20 years. And Home Depot also cut its full year outlook. This was kind of a pandemic star stock because, everyone was stuck at home during the pandemic. They were remodeling their
Hmm.
houses. I was
Hmm.
one of those people, spent a lot of
Hmm.
money at Home Depot
Yeah.
during 2020 and 2021. So, what did this report signal for you about the economy and the US consumer in 2023?
Sure. I mean, we can pull up the chart of Home Depot as
Mm-hmm.
well, just to kind of accompany the discussion here. But I think what was interesting about Home Depot, like you said, I mean, it was, like the biggest revenue miss in 20 years. But it's also coming off of like a stretch where like the numbers have just been absolutely incredible. I think reading through the press release and just, seeing some of like the commentary, it was like the big ticket items were where people really started to cut back on.
Mhm.
And they actually said that this is the first time in a little while, I believe, that the DIY segment actually outperformed like the pro segment, so like the contractor area. And they thought that that was kind of notable, saying that okay, people are, maybe they did those big projects, pulling back on that. Now people are focusing more on like the do-it-yourself stuff to kind of, either save some money or like fix up their houses, but on a more like tight budget.
Mhm.
And they said that this might be signaling that okay, that the consumer is really starting to like downshift from like that big purchase mentality. You know, one company's report, maybe, it's hard to like, extrapolate out and say like this is definitely going to be a trend, but I mean a name like Home Depot that just has such a huge footprint throughout the country, I mean, it's kind of telling. And then when you accompany that maybe with like what things we're going to hear as the retail portion of earnings keeps going, I mean, it could start to paint the picture of, after like a crazy stretch where people seem to have just not run out of any money, the buying power just is there and there and there. Maybe we're nearing that point where people say okay, like okay, I really need to like scale back, whether that's because they're feeling pinched in certain areas, or maybe they're worried about the economy, maybe they're worried about their jobs, like we don't know. But I think it's one data point in what could be like a developing narrative, and I think it's interesting. um, but as you can see from the chart, actually the stock closed higher today than where it even did at that time. So they were reported, and I think what's interesting is like you see like the weekly chart of Home Depot here, and so this isn't a daily, this is weekly. This is over a longer time frame, but that yellow line at the bottom of the chart is the 200 week. And one of the interesting things I thought going into this report was whether it would continue to defend that, because you can see, I mean, since the middle of last year, like that 200-day moving average has been defended multiple times over multiple months, including just the beginning of this year. And it went into earnings basically right at it, gapped below, came back above. So it's both like a battle. It's a battle for like the technical traders, but also like the fundamental traders that are saying like, okay, earnings weren't that great. However, maybe we're at the point where bad news is more expected. Maybe it can start to work higher. The stock has been beaten down a bit. So I thought it was interesting. I actually didn't end up playing this one with options. It was one of the names where I couldn't really get like a feel for it based off of what was priced in, what the setup was. I thought it was interesting. Obviously I was watching it and I continue to watch it, but it wasn't one of the names I actually ended up playing.
I think when we're talking about Home Depot and looking at Home Depot, it is important to note the importance of this stock for kind of the broader market. It's the fifth highest weighted stock in the Dow Jones Industrial
Mm.
Average. It's in the top 20 in the S&P 500. So for the market's sentiment about the consumer and the economy overall, do you think that makes it one of the more important retail industry
Oh, for
names to look
sure.
at?
Yeah. Oh, definitely. Yeah. I mean, and it just has it just has such a huge footprint. I mean, it's it's
Mm-hmm.
similar. It's similar in scale to Walmart. I mean, albeit a little bit different, but
Mm-hmm.
really, I mean, it's one of those names that just has such like a direct read on the state of the consumer, and
Mm-hmm.
like the spending and like what people are spending their money on.
Mm-hmm.
And plus obviously, I mean, like how it impacts like housing and the home market. So I think it's absolutely like a huge name. I mean its impact is massive. I think though it's just right now, I mean, we're at a point where maybe it's hitting like an inflection, and whether it's like Home Depot specific or maybe more of like a telling story of like what's going on with like the consumer in general. I mean, it's a little bit too early to say, but it was
Mm-hmm.
definitely an interesting report because I mean there were some like good nuggets of information there that were a bit different than the last couple quarters.
Yeah, one of those being that, the CEO blamed so much, or CFO rather, blamed so much of that revenue loss on lower lumber prices,
Mm.
which is technically, good for the consumer, good for the
Hmm.
economy, but for somewhere like Home Depot, not great for their sales numbers
Hmm.
when you're
Yeah.
comparing year over year.
Yeah.
So Target today, this morning, beating expectations on the top and bottom line. That's our next big retail report there, confirming its previous outlook for the full year. CEO saying they are seeing a shift away from discretionary spending by consumers, but they're still pulling customers in with the essentials, the groceries, the cleaning products. Target is kind of your catch-all store. You get some clothes in there, makeup, but also a lot of people go there for groceries. So are
Mhm.
these types of retailers you think set up better for the shift in spending versus a retailer who, only sells clothes, for example?
Yeah. Yeah, so we can, wanna pull up the target chart to go
Hmm.
along with this as well. Um, so yeah, so to answer, I mean, there's a couple questions, but yeah, I think that they are set up well to kind of enter like maybe like this different phase of what the consumer is looking for. Um, but Target also, it appeals to also like different consumers. So it does have more like, like cost sensitive consumers, but it also has, I think, like that younger demographic a bit, where it's like the Gen Z, the millennials, which have grown up with like when Target has really like remodeled their stores. They got a lot of like, like good partnerships. They're bringing in like trendier like names on like the home, right? And like even like the clothing. So they're kind of appealing to a different demographic. I think one of the things, and if you look at the chart, I didn't draw any lines on it. I mean, I feel like the chart itself is kind of self-explanatory. This was the quarter that was actually 1 year removed when they had this epic collapse. So there was May of last year. And the problem that Target had was that their inventory was just totally out of whack. They had this like huge buildup in this is when like people's like taste really started to shift from they wanted like home and housing and all those furnishings to like then it was more like clothes and different types of like staples. So they were left with like all of this inventory that people weren't in demand for. And it just led to like the stock cratering. Now they're in a better spot. I mean, one of the things they said this week is that the inventory levels were actually down. So they
Hmm.
finally sorted out the inventory, but I mean, there's still other issues that they're currently working through. And one of the things I thought was maybe interesting was like again, like being a year removed from like when they had like this huge crash on earnings. I thought maybe this was like the time when okay they can really set a floor, say, okay, we're turning the corner, right? Like you said, like consumers are starting to kind of like come around to like the things that Target offers, right? So it's like more like cost sensitive, but also, they have some like trendier stuff. But um I thought maybe it would be like the quarter where it really started to open up and go. Obviously, you can see by today's reaction, it didn't do that. So like this was one of the things like I was like looking for was maybe like a
Hmm.
larger swing, like a bigger move. And disappointed. It's like it was kind of like a muted guide. I wouldn't say it was like like a necessarily like a terrible guide, but it was definitely more muted, and it just didn't lead to like that big turn and move back to the upside that I
Hmm.
thought was possible coming into the week.
Yeah. So you mentioned Target as a stock that you did, or as options that you played this
Mhm.
week going into this
Yeah.
report, and how it didn't go how you thought it would go.
Mhm.
So talk me through your strategy leading up to this report and how you were approaching it,
Yeah.
and then how that strategy changed throughout today's session, or what adjustments you made throughout today's session when it didn't do what you thought it was going to do.
Yeah, sure. So what I was looking at was so what I went with is called the Strangle. So it's basically just
Mm-hmm.
betting for a significant move one way or the other,
Mm-hmm.
not necessarily favoring one direction. Even though in this case I did end up skewing the trade more in favor of the bull side because like that's where I thought more potential lay was like if the they did turn the corner, I thought there could be a bigger move higher. So the Strangle was designed looking ideally for either a move up to 180, which you can see on the chart, that was the triple top. So since it gapped lower last May, it hit 180 separate times. Each time it failed. So the Strangle was either looking for a move up to 180 or back down to like the 52-week low, which is 140, which has also been like kind of a key area, which the stock has bounced at like about 3 unique times as well.
Mm-hmm.
So for me, it was like the trade was skewed more in favor of the bull side, but I was just looking for a large swing. I thought the chart kind of indicated it was possible. And as far as today, I mean, really like it was just it's like a waiting game. I mean, if I get lucky and I do end up getting an extended move over the next two sessions, maybe I can salvage some premium. But really, like my strategies on days like today, when like I play either a straddle or strangle betting on a big move, I don't get it.
Mm-hmm.
Usually my strategy coming into that is either wait to see if I can salvage about 80% of the premium I put into it on that first day. If not,
Mm-hmm.
then I'll give it like another day or two to see if it finds direction. I can get more money back, maybe like turn a profit. And if not, then I just tend to close the option. So for me, it's going to be like another day or two of waiting. In this case, my
Mm-hmm.
options expire on Friday. If by Friday they still haven't made a move, then I'll just try to get whatever money I can out of them.
Yeah. Okay, so still coming up this week is Walmart. So tomorrow morning, Target and
Mhm.
Walmart are kind of your big competitors in the big box retail space. Some people will say different demographics, but a lot of people turning to places like Walmart for groceries and other essentials as their the Krogers in the world get even more expensive with inflation. People go to Walmart, buy store brand, et cetera, et cetera. So how are you setting up for Walmart tomorrow morning? And do you expect to see any type of similar report to Target?
Yeah, so we can actually, so this will be a chart of Costco we can pull up.
Okay.
So this is actually how I'm playing Walmart. We can talk about both because Costco has earnings coming up as well. Um,
Mm-hmm.
but yeah, Walmart and Target are a bit different setup. Walmart, even though you can't see it here, Walmart, it's actually not too far off its 52-week high. So compared to Target, which is significantly lower than its recent high or all-time high, I do feel like Walmart's expectations are higher. There's going to be a higher bar that they're going to have to clear. I mean, I think reading through the Target press release, it seems like Walmart should have a good report. I mean, they mentioned food as an area of strength, and I mean for Walmart, that's a bigger category versus what it is at Target. So
Mm-hmm.
for Walmart, it seems like they're set up well for like a good report. I also think that people are looking for a good report versus Target, where I think the expectations were a little lower. Um, the way I am playing it is actually through Costco, and there's kind of like a twofold read through. I mean, both like Walmart and Costco, they do like a higher percent of their sales for food, but
Mm-hmm.
also Walmart owns Sam's Club,
Mm-hmm.
which is another like big box like retailer like Costco. So Walmart sales itself, but also Sam's Club sales can and has in the past moved Costco. So I looked at the chart of Costco and I thought it was this interesting multi-month wedge that's formed. And I'm like, okay, this is nearing a resolution point. You have a pretty close peer reporting earnings this week. Costco options aren't pricing in an earnings release type move because they don't report this week. So I thought it was
Mm-hmm.
kind of like this interesting dynamic where maybe I can catch like a nice reaction to the Walmart print. Options are relatively lower from like a price perspective, just because there's no major catalyst for the stock.
Mm-hmm.
And when I look at the chart, I'm like, okay, something's got to give here. Either this is going to break out, this is going to break down, but it's nearing like the pinching or resolution point of this pattern. And it seems to me within like the next few days or next couple of weeks, this should have a relatively large move. So for me, hopefully the next few days, just based on
Is
my
that
options.
is that a strategy you like to use during earnings season? Kind of looking
Yeah,
for kind of the domino effect of reports and how they can impact other companies that you could then,
yeah,
use
yeah, of
options
course.
on. Other people are
Mhm.
kind of maybe ignoring that.
Yeah, no, it's one of the things I love, and we talk about all the time on the Alpha Team VTF
Mhm.
they're called Sympathy Plays. So
Mhm.
it's when like you have a highly correlated peer reporting earnings or has some major catalyst that week. Oftentimes you'll get a move in a different name or several different names, but because those names specifically don't have earnings that week, those options will oftentimes be priced at a relatively lower level. So,
Right.
for instance, like Walmart has earnings this week, and the options might be pricing in like a 5 to 6% move, whereas
Mhm.
Costco, which historically will react to Walmart earnings, might only be pricing in like 2 to 3%, right? So,
Mhm.
if you get a similar size move, on options that are only priced in 2 to 3%, I mean, there's definitely some opportunity there. So that's
Right.
why, like, throughout earnings season, I'm always on the hunt for these types of plays. So, whether
Hmm.
it's like in like the semis or retail or energy, like, or even like airlines, right? That's like another great
Hmm.
example. It's like when Delta reports, you would assume that what Delta has to say what would impact American and United.
Hmm.
So there's always, well, there's not always, but there oftentimes are setups where you can like play something else. It's just trying to find which of those setups is actually going to move versus just like a modest or maybe like an immaterial move.
Yeah. For just a reminder for everyone who's here with us live, I see a few questions have already come in, but submit your questions for Dan as him and I are talking here, so we can be sure to have a good, chunk of questions to get to in the second half of this event. All right, Dan. So the other big story that's kind of looming over the stock market right now is the debt ceiling. There's, optimism for a deal rising today after Tuesday's meeting with the House Speaker, after Tuesday's meeting rather between congressional leaders. House Speaker saying today that it's possible to get a deal by the end of the week. I don't think anyone really realistically ever saw us defaulting. They're not. It's total economic chaos if they let that happen. So it's just
Hmm.
jam it to the end until we just keep talking, talking, talking. But the market gets a little nervous about these things. So if in your own opinion, what would you expect this to be? Another kick the can down the road deal, and in 3 months we're dealing with this again? Or do you think the two sides could maybe get something more concrete for a longer period of time?
I mean, what do I hope to happen is, yeah, get something concrete. What do I think is going to happen? Probably kick the can down the road.
What's the
Just
market reaction if, like, we have a 3 month deal and we just know in, okay, what's 3 months from now, June, July, August, this
yeah,
is this
yeah.
is coming up again?
I think it's just going to be like this like perpetual state of just like people just. I mean, so like it's weird because like I want to say people are maybe a little bit more cautious and slightly more risk averse until we get past this, but the truth is, I mean, it's kind of like the opposite environment where we've seen just like this nonstop rally occur in tech.
Mm-hmm.
And there's some like weird dynamics playing out where you'd like to say people are exercising caution, people are a little bit more nervous, people are maybe taking some risks down, but I mean it's actually almost been the opposite to like a certain degree. So it's just like this very unusual scenario where the maybe the stock market is saying one thing, but I mean people are saying like, okay, I mean, they like just what were the headlines today? They said that they think that an agreement could be reached by this weekend. Biden has a press conference scheduled for Sundays. People are optimistic that maybe something will be in place by then. But the
Mm-hmm.
truth is, the truth is, I mean, every time like these politicians speak, it seems like they're far apart. They keep saying they
Yeah.
want to work, they want to get this done. Nobody wants a default. Everybody's saying what catastrophic events could happen or what the impact would be, but I mean, it doesn't sound like anybody's really trying to negotiate. It just sounds like each side is kind of dug in. So I mean, and I think everybody else really hopes that they get their act together and come to some sort of agreement.
Mm-hmm.
I mean, the implications, I don't know. We've never lived through that, so I'm pretty sure that it wouldn't be a pleasant experience. I mean, I
Mm-mm.
guess if you were short, I mean, it would probably work out. But for most people, they're not short, or their 401ks, right? Or
Yeah.
people's social security payments. I mean, you read about what all like the fallout would be, and I mean,
Mm-hmm.
people's social security might not get paid, and government agencies, and I mean, it's just, yeah. I hope they get their
Mm-hmm.
act together. I mean, that's all I can say. I mean, sometimes
Yeah.
like the whole situation just like confounds me. I'm like, how does it keep getting to this point? But I think that's unfortunately just the state of the politics right now.
Yeah. The sentiment on Wall Street, I mean, I the fear seems to, how do I put this right? Obviously, I think the fear that we're actually going to default might be a little bit overblown, but the sentiment on
Mhm.
Wall Street is just, this is just more chaos, more issues for the economy, more problems that we're facing when we're already approaching this expected recession in Q3. Like, Americans don't need more to be worried about to stop them from
Mhm.
spending and stop uh, you know, spending their money. And we have the whole bank crisis thing, and all of that is just like more and more and more piling on top of itself. And I mean, would you agree? with
Yeah.
that. Yeah.
Yeah. I mean, I just think, I think most of Wall Street, they, they've made these statements just, I don't want to say like scaring politicians, because I think everybody's well aware of what the out, if they don't come to agreement, they're kind of well aware of what the
Yeah.
fallout would be. But I
Mhm.
also think that, like, just based off what I'm seeing, that just there's just nobody that actually believes that it could even come to that, right? I mean, it
Mhm.
just even though people talk about it and say it's a possibility and say like we'd better get our act together, I mean, it just doesn't seem like anybody on Wall Street is actually pricing in like the possibility of a default right now, or just based off what's going on, like action
Yeah.
wise. And I mean, the VIX is, I think, what did it close today with, like a 17 handle? So,
Mhm.
I mean, if people were really genuinely nervous, you would expect to see a VIX probably above 17, or,
Mhm.
above 20, or I don't even know where, right? I mean, it seems like if there was like genuine fear out there, you wouldn't have like a really like, just like kind of like out of play VIX, or just, something not showing any interest whatsoever. So, I mean, I think Wall Street is indicating like that, this too will pass, and it's not going to be a big deal. But, at the end of the day, like we still need to have some sort of agreement in place, because, we're getting down to the deadline now.
Yeah. So let's talk about Tesla a little bit. Getting a boost today. The annual shareholders meeting was on Tuesday after the market closed. Kind of some big takeaways. Elon Musk said the company will deliver its first Cybertrucks this year. He plans to make that his daily driver, a Cybertruck. And he also predicted that the Model Y will be the number one selling car on Earth this year. I mean, Tesla is obviously the biggest leader in the EV market. They've done it right. People trust them. Whether you think the cars are well made or not, they're the first to do it in this like mass scale. Where I live, everywhere I go, I see Teslas everywhere. Everyone's driving a Tesla. So, what were your big takeaways from the shareholders meeting?
Yeah. Okay, we can pull up the chart of Tesla with this one as well.
Mm-hmm.
So I think one of the main the main, so I didn't listen live. I read like the transcript, or briefly read through the transcript, and, I saw like the highlights. But I think one of the things that stuck out to me was just, maybe like a return of focus. So I
Mm-hmm.
think when you kind of couple this meeting with the recent announcement that they'd hired a permanent CEO for Twitter,
Yeah.
I think it just I think it helps. I think it helps like Tesla maybe like find its focus again, and Elon, find that focus back with Tesla again.
Mm-hmm.
And I think that that's kind of what people are looking for. Like they want to focus on, getting the new product out. So getting like the Cybertruck into production. They want to focus on producing more cars, right? Expanding their markets. I mean, and it sounded like those were some of like the main points that they were really trying to drive home during this meeting, is like, okay, we're getting back to that focus. I mean, I feel like they were kind of all over the place, and Elon was dealing with the drama around Twitter, and now that
Mm-hmm.
he's moving past that, they can focus on the company, focus on what's coming up next. And I think people were looking for that. They just, they want like the dramas to start to recede. They want the company to start executing, and just getting back to business. And I mean, today was like a great session for the stock, and I think you know people maybe were back into it for different reasons, but I do think that one of the takeaways for me was just like that return of focus, which had
Mm-hmm.
been lacking for a while.
Mm-hmm.
um, Now, as far as the stock itself, I think what's been kind of interesting, and it wasn't just today, it was actually over the last couple of weeks, is that Tesla reset a bit of like a key monthly support level. So it's right around 160. It lost it actually right after earnings, and then it got back through it 2 weeks ago, and as of yesterday, it looked kind of like in danger of getting back down there. It was starting to leak a bit, but
Mm-hmm.
nice recovery today. And um, this is just on a daily chart. So if I went out like to like a 2 or 3 year chart, which you can't see here, but you would see that the Tesla has like a bit of like a long-term downtrend that's formed. And actually, if it starts to break through some of like these lower levels and start to make a push back up to 200 again, which I think is possible considering like the overall environment for like these large cap names, right? We've seen like such like a
Mhm.
strong bid and so many names that are, like over like a certain market cap. So if it
Mhm.
starts to get through this, like the current downtrend, make a push to 200, it actually would be flirting with like that multi-year downtrend. And
Mhm.
that's really like the point where we've seen some explosive moves on several other large cap, mega cap names. So like a Microsoft or Nvidia, or even right now, Google's kind of going through the same process where it's breaking through a downtrend that maybe began at the end of 2021. And as it starts to move, right, it starts to stack levels, momentum picks up, people start to pile in. So I think Tesla has the potential for that. It's
Mhm.
not quite there yet, but I do think that maybe the shareholder meeting could be like, kind of like an initial spark where, people think, all right, Tesla's maybe back to focusing on Tesla, or Elon's back to focusing on Tesla. Maybe they can, turn the corner, focus on the Cybertruck, focus on production, like expand into different markets, right? And I think that
Mhm.
that could be like a nice, maybe like, longer term catalyst to really get the stock going again. So it's
Yeah.
interesting.
Yeah, I think the point about the focus returning for Musk is a big one
Hmm.
for Tesla
Yeah,
investors, especially after
absolutely,
the
absolutely.
Twitter announcement, for sure. All right, I
Yeah.
have a couple more questions on my end here. So for everyone that's joined, that's here with us live, I see the live number. I see you there. Ask your questions for Dan because we'll be getting to those after these next two questions. So Dan, I've been talking about this with all of our traders here that the market is stuck in this really tight range. We've been in this range for a large majority of this year, kind of after February, after we saw that rally at the beginning of the year. So talk about the overall environment and how you've been able to still find opportunities in this market as we bounced up and down in this range that we're in.
Mhm. Yeah, let's pull up the SPY just first.
Hmm.
So yeah, so I think this is one of like the interesting things about the current environment is that like even though like so a lot of people focus on the S&P. Obviously
Hmm.
it's like it's a good indicator of like overall market activity. I mean, it has like a wider mix of stocks within it. So um, what's interesting about the S&P, like you said, I mean, it's just been range bound for the like the better portion of the last 2+ months, um,
Hmm.
and today was actually like a kind of a key session because it put it up near like the top of this lower black bar, so like the trend, which goes back to the middle of last year. So it's been like kind of just hanging out underneath like this multi-month or multi-year resistance zone, and I think eventually if we do get this debt agreement in place, I mean, there could be like a nice breakout. There could be like a bit of a catch up because, which I'll show in a second. The Qs have actually
Hmm.
gotten back to their level from August of last year, which is the second bar up on the S&P, on the SPY here. So there's
Mm.
been a bit of like a lag on the SPY. Now let's pull up the chart of the QQQ, and we can
Mhm.
talk about. So you can see that there's a much bigger, much bigger performance gap in the Qs right now. So not
Right.
only are the Qs through that monthly resistance, the lowest bar, they're through the second resistance zone, and they're right now after today they're back up to their best level from August of last year. So as
Mhm.
far as like what's working, I mean, I think these two charts just highlight it like explicitly. I mean, right now, tech is the place to be. There's just
Mm.
unbelievably strong bid in tech. It's starting to broaden out a bit right now. For a portion of like the last month or maybe month and a half, it's been very very specific to a lot of like the large cap names. But
Mhm.
it is starting to broaden out, which is good because that's really what you want to see. I mean, you don't want a market led by like 5 or 6 or 7 stocks. You want a market that has like a lot of participation, a lot of different areas, right? Because that makes it more
Mhm.
sustainable. I mean, that it says like many things are working higher. People are moving money around, putting money to work. So right now, just to get back to your question, I mean, what's working? What are people doing? What am I looking at? I mean, right now it's still tech, and tech is still working. And I mean, compared to the S&P, which is still range bound and just lacking direction. I mean, Qs and tech in general is just continues to like find bids. And this has been something we've seen since March, where people perceived like the large mega cap names as like kind of like the place to be. during the banking crisis. So it started this big bounce, and then the bounce kept going after earnings,
Mm-hmm.
right? After a quarter where a lot of names like were either better than feared or just better in general. And now it's starting to broaden out to like semis. So like, I mean, NVIDIA's been great year to date, but like AMD, right? That's starting to waken up. You got some software names, which for a better portion of this year were just, choppy, miserable messes, but now they're
Mm-hmm.
starting to come back to life. So I think right now, and I think until something changes, tech is kind of like the area where I want to focus, where I think there's more opportunities. Eventually, if the SPY breaks through that level that I highlighted in the previous chart, then I think you probably start to see maybe the financials, maybe some healthcare, right? Some of those other areas, they might start to wake up and play some catch up. But for right now, and until something changes it, it's probably going to, for me, it's probably going to be tech. So whether that's the big names, the software names, the semis, I mean, just looking for opportunities there.
I'm mentioning the mega cap tech names. They've really kind of shifted from being growth stocks to being almost, they act like defensive stocks kind of in
Mm-hmm.
the environment that we're in. These are the stocks that people are leaning back on as kind of their go-to names, where they think they can still make money even if the economy goes into recession. We're seeing, yes, big layoffs at these companies like Google and Meta and all all of them, Apple, etc.
Yeah,
But people are still
literally all of them. Yeah.
buying into the stock. Do you think that's a shift in the market that's going to become permanent? That these names are now your defensive names versus some that may have been before?
I mean, I think I think that there has been a large shift in that perception
Mm-hmm.
since March. I mean, I think what's maybe aided it right now is that a lot of these names had decent quarters.
Mm-hmm.
So I think it's helped maybe both, like, give the idea of like, okay, this is where people want to park their money. Also, maybe these names are a little bit more, I don't want to say like recession resistant, but maybe they weren't as at risk as maybe some people were kind of like scared
Mm.
about coming into the
Yeah.
year. Um,
Mm-hmm.
but that doesn't mean that, like that mentality can't change, a few months from now, or 6 months from
Mm-hmm.
now, right? Because I mean, sometimes it's like the things that we don't see are the ones that have the biggest impact. I do think that, actually, you can pull it up right now if you want to pull up the chart of the UUP.
Yeah.
But one of the things that works, that has worked in favor of those large tech names, which may now, as you can see from the chart, may start to work against them as like a headwind, is the strength of the dollar.
Mm-hmm.
So because there's a big multinational companies, they have a lot of exposure to the dollar. For a portion of last year into the
Mm-hmm.
beginning of this year, I mean, the dollar has really retraced, but now it's starting to break through like this monthly downtrend. And if that continues to work higher, right? If the dollar does continue to rally, I mean, that's definitely going to turn into a bit of like a headwind for some of these mega cap
Mm-hmm.
tech names. So you know that in and of itself is probably not going to be enough to change people's idea of that these could be like defensive or safe havens. But what that does is it could start to erode some of the estimates for earnings, which that might slow down momentum a little bit on those mega cap names. But I mean, and we were talking about this on the alpha team this afternoon. I mean, until until like there's like some material event that
Mm-hmm.
you know really makes people question whether Apple is the place to be, right? I mean, right now Apple is in a very steady uptrend, and people have come to the conclusion that they got a lot of cash. They seem to be doing okay. They're paying a dividend. It's kind of like steady. I mean,
Mm-hmm.
somebody may brought up the point that like consumer staple stocks, like, I mean, and I don't know exactly what Pepsi is trading for at the moment, but like Pepsi and Procter Gamble and Coke, I mean, they're trading for like 28, 30 PE right now. I mean, what's the difference between those necessarily and Apple? I mean, I get it. Apple's like it's technically a tech stock, but really it's kind of like a consumer staple in one
Mm-hmm.
sense. So,
Yeah.
I mean, when you look at it that way, it's like, okay, like, do you want to pay, and I don't know the exact number on Pepsi, but I mean, do you want to pay like 28 times earnings on Pepsi, or do you want to pay 28, 29 times earnings on Apple, right? I mean, to me, like,
Mm-hmm.
they're kind of like one and the same.
Yeah. Yeah, definitely a shift in like the current consumer environment, that's become like a staple. Everyone has a cell phone. Most everyone has an iPhone. Most
I
everyone is
mean,
buying Apple products. I'm talking to you right now on AirPods.
yeah,
I mean, everyone
yeah.
has
Well,
Apple products.
I posed the question. I mean, one of the things that really has helped the staples. I mean, their revenue numbers have been going up, but that's mainly because they've been raising prices. So
Yeah,
they've been able to like pass along the price increases to the consumers.
right.
But what I was saying, and I posed a question to anybody: would anybody balk? So like the AirPods, what are I don't know what they go for now, 200 or like two,
I don't
three
know.
hundred. So
Yeah,
so say they're 200 right now. I mean, if Apple charged 225, would anybody balk
no,
at
no.
paying that? Or if or the current iPhone, if it's like 1200, if they charge 1250, would anybody really, would that influence people's decision whether they're going to get a new iPhone? I mean,
Hmm.
Apple probably has that ability to like raise prices, if they needed to, because I mean I mean, they always institute, or they always like, debut a new phone and it's always got a higher price point. But I
Hmm.
mean, could they just raise the prices a little bit? And I feel like they could, and nobody would really push back, because I mean, 200 to 225, people, if the people want the product, they're gonna do it.
Yeah,
So
I agree.
I feel like,
Totally.
yeah.
Yeah, okay.
Mhm.
So let's go to our audience questions. Our first question comes from Galena. So everyone who's here, submit those questions now so we can make sure to get to them before the end. But she asked, do you like to play earnings? And if yes, what kind of options trading strategies do you like to use around earnings?
Yeah. So, I mean, I will do well. So the first part of the question, yes, I love to play earnings. So the
Mm-hmm.
second part of the question, it's going to be specific to that stock and that setup at the time. But what I do like to do, and probably you'll have noticed from like just the chat today, is that I like to play volatility strategies. So
Mm-hmm.
straddles, strangles. Um, what interests me, or I guess what I like about those is that I don't have to get the direction right. And I think one of the things that people kind of slip up with when it comes to earnings is like, they'll be say, oh, like this is like a can't miss report. I mean, like of course they're going to crush it, but then all of a sudden the stock misses and it's down like 20%, and you're like, oh, I can't believe that happened. But to
Mm-hmm.
me, instead of trying to like pick the direction, as long as I can find a setup where I have confidence that the stock is going to exceed what's priced in, then to me that seems like an edge. So what I like to do is like try to find those setups where I say, okay, the market is, our options are only priced, options are pricing in like 7%, right?
Mm-hmm.
However, this setup to me seems like there's possibility for like a 10 to 15% move. So in that case, I might go out and I might target an option strategy looking for like a 10 to 15% move. Whether it's higher or lower, that doesn't matter to me, as long as it ends up moving 10 to 15%, then
Mm-hmm.
I probably will end up making money. But that's kind of what I like to do. It's not necessarily picking the right direction. It's more about picking the right setup and just looking for movement.
Mm-hmm. Straddle and strangle are two terms that are used a lot by you and anyone that trades options. But for people
Mm.
who don't trade options, just explain what those two are, what a straddle is, what a strangle is, what the difference is between the
Yeah. So a straddle is, they're both, so a straddle and a strangle both require purchasing a call and a put.
two.
The difference is that a straddle is it's the same strike price. So you're basically buying at the money, an at the money call, and at the money put. A
Mm-hmm.
strangle is same in the sense that you're buying a call and a put, though the call is out of the money and the put is out of the money. So
Mm-hmm.
the strangle typically is going to be a lower price point. So
Mm-hmm.
your risk is lower, but you obviously need a bigger move to get to the strike prices. A straddle is
Mm-hmm.
going to cost more money, but in one sense, it's got a little bit less risk, because if the stock doesn't end up having a big move, the options that are at the money are going to hold on to their premium better,
Mm-hmm.
versus like, say you go out of the money 10% and the stock moves 1%, and all of a sudden those out of the money options are going to be evaporated. So
Mm-hmm.
um, strangles is lower dollar commitment. Typically, straddle a higher dollar commitment, but both option strategies revolve around purchasing a call and a put, and betting for a big move in either direction.
And I'm going to make you dumb it down even more. What does it mean to, buy a call and a put at the money and out of the money? I know what these things
Yeah.
mean, but let's
Yeah.
just break them
So
down.
of course. So at the money just means like, so say for instance, Apple went into earnings at 170.
Mm-hmm.
So a straddle would be purchasing a 170 strike call and a 170 strike put. So that's at the money
Mm-hmm.
because the Apple stock at that time is at 170.
Right.
Um, so hypothetically, if I wanted to do a strangle, I could have maybe purchased the 175 call and the 165 put. So the 175 call is $5 out of the money. The 165 put is $5 out of the money. So for me to make money on a strangle in that scenario, it would have to go above 175 or below 165. So
Mm-hmm.
whereas, a straddle, you might need a smaller percentage move.
Mm-hmm.
Um, uh, you're going to have to lay out more money.
Mm-hmm.
Whereas a strangle, you might need a bigger percentage move, but you tend to lay out less money.
Yep. Okay, great. Our next question comes from Ryan. He asked, Dan, if we agree AI is a real investment theme, do you see more potential in related chip names, software companies, services like C3 AI or some other subset?
I think there's going to be potential in everything. I mean,
Mm-hmm.
if it's really going to be as big of a field as many are anticipating, I mean, I think that there's going to be lots of opportunity. Um, I think what's interesting, and I forget where I was reading this, but a lot of times we get so excited about like the beginning of like a new area of interest, right? So whether that was
Mm-hmm.
like crypto or I mean, what would have been more recent ones, like it was like cannabis or I don't want to call them like, I don't want to call them like fads or bubbles, but I mean a lot of times they do end up turning into like bubbles just because there's so much hype. And
Mm-hmm.
like what was interesting is like oftentimes like the first names associated with that don't always become like the most lasting or the most important figures in that space, right? So like right now, AI is taking off, and like OpenAI is like a hot name, and Microsoft's association with them. I mean, NVIDIA has
Mm-hmm.
been like probably the go-to name for AI. And I mean, some of these other names like C3 AI and some smaller plays, I mean, they kind of get lumped into it and ride the momentum. But I mean, if AI is really going to be such like a powerful force going forward, I mean, I think there's going to be lots of opportunities, and I think what it is just is like looking for like the companies and the stocks that have good compelling ideas, or like a good compelling like business plan with how to like approach it, right? Because
Mm-hmm.
just because Nvidia right now is anointed like the winner, or OpenAI maybe has like the best like or most hottest like chat platform, it doesn't mean that like 2 years or 3 years or even like several months down the road like something else isn't going to come up. So I think it's just being familiar with like with like the field, right? Like doing your research, reading, like kind of like follow like the names that are coming to market, the names that are starting to participate, and like kind of explore what's going on, right? Because I mean, to me, it's like it's like, okay, even if you miss like the first wave of this, right? If you miss like the move in Nvidia, or if you miss like the move in Microsoft, I mean, there's going to be other opportunities, and it's just like when they present themselves, it's just being able to like recognize the opportunity when it's there, right? So
Mm-hmm.
so right now, to me, it's more about just like getting up to speed, right? So I definitely like it. I'll be the first to admit it. Like definitely did not capitalize on some of these moves
Mm-hmm.
nearly as much as I should. I mean, I honestly, I don't know if I'm even up money on Nvidia year to date. I mean, I think some of the times I've traded, most of the times it's been trying to short it, which obviously has not worked. So for me, at this point, it's just okay. AI is definitely going to be a real thing. Now it's just like, okay, like, okay, I need to like do more research. I need to like figure out what's coming next. I definitely want to like, the next opportunity, whether, the next like new or cool aspect of this, like I want to be involved with. And it's just waiting for that, and like, biding my time. And when it does come out, hopefully I can jump on it and make some real money.
Mm-hmm. Okay, our next question comes from Ryan as well, but a different Ryan. He asked, how about short options strategies for the time between catalyst movements? So, when we're not in earnings season, for example, macro such as SPY, QQQ, or even a single stock.
Yeah. So, So I didn't know if you meant like selling premium. So I could like answer that in two ways. So
Okay.
selling premium between catalysts. Yeah, I mean I could see how that could be like a good strategy. You know, I mean it depends on the individual name and the individual setup at the time, but yeah, typically after you get past a big catalyst, you notice like a period of contraction, both like volatility wise, where like the stock starts to quiet down after like a big move, but also like option wise. So after volatility quiets down, premiums also tend to contract, right? So selling
Mm-hmm.
premium or being short premium after like a big event, I mean, it actually, it does make some sort of sense.
Mm-hmm.
If you're thinking about, how to trade or how to approach options post event, for me, what I like, and unfortunately, I don't have like the chart to show right now, but I love what's called like an 8 EMA catch-up trade. So, what I like to do is, after like a big earnings move or after a big market move, I wait for the 8 exponential moving average to catch up to the stock. So whether that's higher or lower, depending on the gap. And typically what I do is like I wait for that to set the floor if it's
Mm-hmm.
higher. And then what I find is that oftentimes that, it's after setting the floor, it helps momentum turn back to the upside. Or if there was a big gap down, I wait for the 8 EMA to catch up overhead. That sets the ceiling, and then I wait for momentum to start to turn to the downside. So right now, like post earnings, post big moves, like what I'm doing is like kind of like filtering through, making notes of what stocks were like the big winners this quarter, which stocks were the biggest losers, and just waiting for like those setups to start to form where like that 8
Mm-hmm.
exponential catches up, sets the ceiling, sets the floor, and starts momentum, and maybe I can get like another quick move in whatever direction the stock gapped.
Mm-hmm. That's great. As we're coming into the end of earnings season here, to just touch on, what that strategy is as it closes out and we kind of
Yeah.
wait for July for the next
Yeah, of
earnings
course. I
season
mean, I
to
mean,
begin.
sometimes like you get even. I mean, to be honest, you get better moves after the earnings. I mean, like
Mm-hmm.
because like some of the best reactions to earnings are surprises, right? I mean, that's why
Mm-hmm.
oftentimes the moves happen and they're the steepest is because people were surprised by either how good it was or how bad it was. So after the surprise and once people start to like kind of like dig into it, then you can sometimes see even better moves. So like I
Yeah.
mean, if you look at like Nvidia last quarter, and again, sorry, I don't have a chart, but if you look at Nvidia last quarter, it had like a good sized move on earnings, but
Mm-hmm.
actually after earnings, I mean, the stock just started to take off again. So even if you missed like the 25 or $30 gap, whatever it was when the company reported, I mean, there's still plenty of opportunity after that. And same thing with like a lot of these names. It's like, okay, you maybe missed the first gap, but as long as you make note of it, keep an eye on it, and let the setup develop. I mean, there's what I find is like oftentimes there's a lot of opportunity, maybe even more opportunity, after like the several weeks or month or 2 months after. So
Yeah.
there should be a lot of opportunities. It's just you know going through earnings is just figuring out where were the big winners, where were the big losers, and just really focusing and waiting on the right setups there.
Mm-hmm. So for everyone that's with us live, just kind of your last call for questions. We're under 10 minutes left here. So last call for questions, get those in. So Dan can answer them. I'll ask you a question, Dan. We talked about how this market is in this tight range. The S&P 5, the S&P, the SPY mostly in this tight range, tech kind of breaking out. What do you think it's going to take for the market to either break down or break out this year? Do you think it's possible to happen this year? Or are we going to kind of in
Yeah,
2023 just
I mean, at this point, and I'm never one that like says, we're definitely going to do this, we're definitely going to do that.
yeah.
Like I don't often like make like big market wide projections, but
Mhm.
I would say that being in almost halfway through the year now, it to me it's kind of growing increasingly unlikely that we're going to either get back to an all-time high or take out last year's high.
Mhm.
It seems unlikely right now. I mean, things can change, but I could see us obviously. I mean, I think getting back to the all-time highs is I don't think many people are expecting that, but
Mm-mm.
I mean, I still think there's plenty of people calling for either a retest of last year's low or a break below it, and I don't know. But right now, the way things are the cards are starting to like fall into place, it seems like it's less likely of that happening too.
Mm-hmm.
But I mean, I think the debt ceiling is the most clear and present danger. Assuming that politicians get their act together and that's not a calamity. What comes after that? I think you have like the Fed is still kind of the Fed is still kind of like an unknown. I think like the commercial real estate. I mean, a lot of people have been starting to like sound the
Mm-hmm.
alarm bells. I mean, it's kind of remarkable that we're that we're talking about like this rally happening when you still have, maybe not every week, but every couple weeks there seems to be a regional bank that's on the brink.
Mm-hmm.
So I don't think we're necessarily totally past the banking crisis, and I think part of that, I
Mm.
mean, the commercial real estate is going to play into that too. I mean, a lot of like bank CEOs have been speaking about. I think JP Morgan just Jamie Dimon just in the last like day or two was warning about it again. So
Yep.
I mean, I think that's an area of concern. So I mean, I think there's things that could change the course of the market. It's just, right now, I think the most pressing and probably the ones most people are most concerned about is just the debt ceiling. And once we move past that, I think things should open up. I think the
Mm-hmm.
S&P should move out of its range, um, one way or the other. And
Yeah.
then, as we get into June and July, I think it's like the Fed and economic numbers are probably going to take more center stage again. And
Mm-hmm.
and then before you know it, we're gonna be back into like earnings in July, and then we're gonna start that whole song and dance again.
Yeah. So kind of to wrap things up here, you mentioned the Fed. We'll hear from Fed Chair Jerome Powell on Friday. He's scheduled to give a speech. Next week, we'll get the May FOMC meeting minutes. So just, more insight into that conversation that was happening around a
Hmm.
pause and whether we are paused or not. Then we have the next meeting, June 15th through 16th. So you're right, we're coming up on focus back on the central bank. Let's see, what the market obviously is expecting the Fed is done. And the Fed has pretty much said we're done, but they're holding
Hmm.
higher. The
Hmm.
market, though, is expecting up to 3 rate cuts still by the end of this year. I would argue the market's not trading like we're in any type of situation that would call for 3 rate cuts by the end of
No,
this year. So how does that disconnect get resolved?
I think time. I
Mm-hmm.
mean, yeah. So I've been reading more about it too, because it's really interesting to me how there could be such like a stark difference between what the Fed is communicating and what people believe it will ultimately happen.
Mm-hmm.
Um, but I think time is the only thing that's going to resolve it. As we start to move through the year, as we get through June, we get through July, as we see economic number. I mean, if inflation doesn't really quickly fall back to that 2% target, and I forget who the Fed speaker was that said that they want to see, it's not just one reading of 2%. I mean, it's 2% for an extended period. I mean, I think just
Mm-hmm.
that comment in and of itself tells you that it's going to be a longer process. So um,
Yeah.
I think time is what's going to like narrow the gap between what the Fed is saying and what the market is expecting. I mean, like the longer we go with like the Fed not budging, I think the more people's expectations are just going to gradually shift. Or I
Mm-hmm.
mean, I also was reading, and I thought it was kind of a compelling argument that the Fed funds futures in December, they're more, they might not be pricing in necessarily like 2 to 3 separate rate cuts. It's almost like the Fed funds futures are pricing in possibly one, like something huge breaking,
Like
and
a
then doing like a
emergency,
large emergency cut.
kind
So
of like we had the emergency hike. Maybe we'll get an
mhm.
emergency cut. Yeah.
Yeah, so that's what I was reading, like somebody was saying, like, it's kind of like an interesting argument that, it's not necessarily that,
Mm-hmm.
at 3 separate meetings they're going to be cutting rates. It's more so that like, all of a sudden it's like, oh my goodness, this is like turning a disaster. We have to do an emergency cut.
Mm-hmm.
So, maybe in that sense, like the Fed funds futures will continue to say that, but unless something like catastrophic happens and they're forced to cut, it might be start to like gradually get pushed back to 2024, or maybe just, people start to not expect that.
hmm Before we end this, I want to get a quick touch on the housing market. It's kind of a sticky point of inflation for the overall economy. Prices are still really high. Mortgage rates are still really high. We're seeing demand kind of up and down on a weekly basis based on the weekly fluctuations with mortgage rates. Home builder sentiment back in positive territory as of yesterday for the first time since July of 2022, because builders say, hey, we're seeing tons of demand because people can't find any existing homes for sale, so they're
Mm.
coming to us instead. People still want to buy homes. Demand is high, inventory is low, prices are high, mortgage rates are high. How bad is that for the inflation picture in the Fed?
Um, it's not helping. Yeah,
Mm-hmm.
and wow, I wish I had bookmarked it. I actually there was one point one point I saw this morning when I was like just scrolling through news. They were saying that I think there was like a rent indicator that started to tick back up just
Mm,
in the last like month or two, and they were saying like that like the I think it was like leading rent that I mean it really started to it's signaling that rents could be after having paused or pulled back, rents could be starting to tick back up again, which I mean that's really going to complicate the picture for people saying that we're through like the peak housing or peak like rental period.
mm-hmm,
So I mean, I've always, maybe not always, but I've definitely been of the opinion for a while that the people expecting rates to be materially lower by the end of this year. I mean, I guess I just don't see it unless something like really breaks. I mean, it feels like inflation is more entrenched than people are willing to admit. Whether
mm-hmm.
it's like housing or rents or just like we still see it in like food and
Yeah.
wages and labor. So I think the Fed has more work to do, and I think that rates are going to be higher for a longer period.
Mm-hmm,
And I, I mean, me like personally, like I'd love for like the house to see like a housing correction. Being somebody that is interested in purchasing a home.
yeah.
However, I mean, I don't know. I don't know when that's going to necessarily correct because like you
Mm-hmm,
said, I mean there's still like a lack of supply. I mean there's still more buyers than what the inventory is on the market. So um
mm-hmm.
I think it's a problem with not an easy fix, and I don't think it's going away
Yeah.
anytime soon, and I think that that's really going to be something that is going to be influencing the Fed policy for a
Yeah.
while.
Well, and ultimately, the ultra low rates of 2021 and 2020 and 2021
Mm,
ultimately make this problem worse because now you have people who have a 2.5% mortgage rate
mhm,
and say, I'm not going
mhm.
to sell my house. I can't because I can't afford higher mortgage rates. And then you just have people
Yeah,
staying in their homes,
yeah,
not selling them. Not good. All
yeah.
right.
It's
Well,
it's interesting.
it's an interesting situation. All right. Well,
Yeah.
we'll wrap it up there. Everyone who is with us still, I do still see that live number. I'm posting a link in the chat right now for next week's event. Derek Olden Smith, the senior trader at T3 Trading Group, will be joining me again for a conversation next week. Dan and I previewed some of the stuff coming up next week, but we have the FOMC meeting minutes, we have the PCE inflation, some more retail earnings, some more housing market stuff. So it'll be a good week to talk about that. And Dan will be back in the future as well in about a month. So thank you everyone for joining us today. And thank you, Dan, for joining me as well today.
Thanks so much for having me. I enjoy our talk. So look forward to speaking to you in a month.
Yeah, me too. Thanks.